right. Give me 1 sec. I did not memorize the questions, but they will be tough. All right, why don't we get started? I think I want to go a little easy on you guys, and why don't you, each of you, start with introducing yourself, your background a little bit, and explain why, and how you got into angel investing.
Is live? Live? Good. Well, back in the day, I was the CIO of this little company that's not IBM, but it's called Accenture. And I negotiated a deal with the C-level execs at Accenture. And the deal was they could not talk to startups because a few thousand startups around the world wanted to do business with us, sell to, sell through, sell with. And the C-level execs were in an awkward position because they had a brother-in-law who started a company, or maybe an over-the-fence neighbor who started a company. And the execs couldn't say no to them. And so the deal was I had to talk to every startup that wanted to do business with us before we would consider broadening the net for them. And what I learned was that 2/3 of them had not the first clue how to create value for us. And of the third that was left, 2/3 of those could not do anything at enterprise scale. And so that left about 10%, and we did business with those. When I left Accenture, I decided to spend my time with startups and help improve their chances for success. And that's what got me into angel investing here in the Northwest 20 years ago.
Hi, everyone. Ken Morimoto. I've been angel investing since 2014 for about 10 years now. But I graduated during the dot-com craziness in 1999. I'm aging myself now, but I joined a bunch of startups. Most didn't work out, a few did. But I got heavily involved in angel investing from meeting one of my, I wouldn't say a mentor, but he's a super angel named Paige Craig. He's a legendary investor. He invited me to look at some deal flow of his, and that was my first, one of my first checks wrote, and now done 200 plus. So it's very exciting for me to do angel investing. It's especially if you're a curious person and meeting very passionate, talented founders. This is what I enjoy doing on my weekends and evenings. So, thank you for having me.
So, I'm Peter Weiss. How did I get into angel investing? Late in the 90s, height of the dot-com boom, I was coming out of a very bad job situation. It was probably the only normal job that I ever had my entire life. And that did not work out so well. Hint, never go to work for siblings. Bad idea. You're not going to survive. Great guys, but. And a friend of mine was one of the hottest part-time CFOs in the area, middle of the dot-com boom. And he said, hey, just print a business card. You know all the finance. You can have my overflow. I can't return all the calls I'm getting from VCs. That's how I started. And from there, eventually, I started investing in deals about the same time. But in some ways, the most important thing about my background and where I come from on this, I've got the formal education. I've got all the degrees and, time on Wall Street, time doing all kinds of fancy finance. But I grew up in a family business. And, I would stand there on a Saturday afternoon with my father counting the pay for the folks who worked for us into envelopes, having looked up their pay on the tax charts. There were no PCs. In fact, almost no one was doing payroll on computers in those days. This was the 60s. Chuck will remind me it was the 1560s. And so I learned about how to make payroll. I learned that when no one else does it, the boss takes out the trash. I learned that when there's a ticked off customer, you better take care of them. And oddly enough, even though we were selling Hungarian paprika and salami and sausages and, fresh roasted whole bean coffee when no one in the country cared because Taster's Choice was the biggest thing in the coffee world, those principles still apply to everything that any of you guys are dreaming of doing. Doesn't matter how out there it is, even if it's real AI as opposed to most of the things that I hear called AI that really aren't, but we'll leave that aside. End of the day, you take care of your people, take care of your customers. Single most important job of a CEO, normally I do this as a quiz, but I'll make it easy for you, never run out of cash. You learn that, and I learned that starting when I was 8 years old, and Dad brought me in to work for a Saturday. So.
Awesome. Sounds like each of you has had some sort of trigger to get started. So one of the lessons I got here is, curiosity will take you places, and perseverance, and you'll get some results. For the essence of time, I have another question to dig a little bit deeper. Could each of you give me maybe one notable investment you've made, and what were you looking for, and why did you select that? Just quick bullet points for that. Peter, you want to start?
So my number one criteria is I got to believe that on a risk-adjusted, time-adjusted basis, my family's going to make money. Beyond that, everything else can be discussed. Now, do I believe the CEO? If I don't believe the CEO, therefore I don't believe I'm going to make money in it, that one's easy. I need to see that they understand their economics. That's real important. It's amazing how many startups have no clue what it takes to be in business. They've got no idea what overheads are. They don't even understand their unit economics. But I'm very broad. I'm very open. I do very short-term deals. I do cash flow deals. I do long-term, park the equity and hope that it comes back in 15 years. I'm really in it, again, to increase my family's wealth. Everything else that may happen beyond that is cherry on top.
Ken?
Yeah, same objective, right? Like we want to essentially be alpha, and one thing, angel investing is like a 10 to 12-year maturity event. So sometimes you don't even know, how well your investments are doing.
That may be the most important thing you hear tonight.
So it's not like a pump and dump crypto scheme, right? Sorry to say that, but I mean, since Jack's here, I mean, I recently backed Jack. I think he's the perfect. I mean, I'm biased, but he's going to be sharing his story. But he's the perfect founder that I'm looking for, right? With deep domain expertise in their specific field, very talented team that has a track record of execution, and a problem that they're solving with AI or technology that has a clear value proposition. And importantly, like he came with a lot of great traction, which is very important for angel investors. You want somebody to at least have an MVP, or so they had a list of really notable contracts signed. But number one question I always ask myself or ask the founder is like, why are you the perfect team to solve this problem? And so if they're not the perfect team, then I usually need a password. They can't really explain it, then it's usually a hard no.
Thank you.
That's fascinating, because I don't think there is a perfect team. And how many of you are founders? Can you just raise your hand? Okay, and the rest of you are investors, right? Okay, all the founders, I'd like you to put your hands over your ears. The most important thing is to realize that every founder will lie to you. For you investors in the room, every founder is going to lie to you about their business. Now, I just invest in things that I know. I don't invest in pharma because I don't know pharma. I don't invest in medical devices because I don't know medical devices. I know tech, I know manufacturing, I know services, I know a lot of things. But when I listen to a founder, they are living their life in the future. They are living the aspiration of the business that they're trying to create. And they can't always tell, even in their own mind, the difference between an aspiration and what's real today. And so as an investor, what I've got to figure out is what's real, what's an aspiration, what lies are the founders telling me. And they don't mean to be liars. They don't mean to be mean. They just are aspirational. And so if you're an investor, think about how this idea is going to make you money and figure out what the truth is.
Hope the room is catching those good nuggets out there. Um,
I thought so. It is now.
Voice care as well. So.
So on that same note, let's talk about maybe the biggest lesson you've learned from an investment that hasn't gone the way you thought. Ken, you want to start with that?
Oh, I mean, there's so many lessons. I think, entrepreneurship is the founder, I call it a hero's journey. I mean, it's extremely, that's why I have so much admiration and respect for people going on this journey, because you got to be lucky too. Like, you have to, the market has to, mature the way you envision it. You have to pray that, AWS or Azure doesn't commoditize your product and look at the space. Founder breakups, mental crisis, whatever. I've seen it all. But I think that's where, as an angel investor, if you want to do angel investing, you have to at least make 20 bets, because you need a wide portfolio, because you have to have all those factors, the wind against the sail, right, to make it. So what I realized is that even the ones that I thought were the most, that's going to make my fund, and after a Series B, Series Z, when it had pre-seed, pre-demo day, Y Combinator, they went out of business, right? Valancy, which is, they raised like $200 million, and on paper, my investments was like 50x. And that happens all the time. So I think you can't really, take credit until like it actually has an exit. And so that could take 10 to 12 years, right? So that one thing I realized is you got to be patient, and you have to keep on making a lot of bets if you really want to maximize your chances for success.
Charles, you want to give it a go?
Yeah, I'm still alive. Okay, good. Every lesson, every hard lesson that I've learned in investing had to do with the management team. And if you've got a great management team, they'll make a good idea into a good business. If you don't have a good management team, they will ruin the best idea on the planet. And all the lessons I've learned were about management teams that weren't what I thought they were when I made an investment. I had management teams who used poor judgment. I had management teams that behaved illegally. I had management teams that tried their best, but they just weren't up to it. I invest in management teams more than any other single factor in an investment. Buy a good management team, and you're likely to buy a good business. Now, things can still go wrong. You can still have a killer asteroid that will destroy a business. But a management team will help you turn your investment into real money.
Actually,
Peter?
that's an interesting point. Just like I was watching Mike Volpe, Floodgate, he said 80% of his returns are from founders that pivoted. So like, back on that, like if you back the right founders, they may have to pivot to a completely different business model, but 80% of his LP returns, and this guy is like minus touch 5 times. So it's interesting data point.
I have a friend in New York who, very, very good angel investor, and has said they're not interesting until the third pivot. So if any of you are founders and think that you've got a straight line to glory and success, hate to break it to you, no, you don't. And by the way, the chances that you're going to be the CEO of that company when it's a multi-billion-dollar IPO on the New York Stock Exchange also approach zero. As an investor, when I hear someone really holding on to that, I try to back out of the room and not turn my back on the person, because who knows what might happen. Over the years, I've gone back and forth on the idea, the opportunity. Personally, I hate the TAM slide. I don't care that it's a $438 billion worldwide market. If you can't tell me how you're going to get your first $100,000 or $500,000 of revenue, it doesn't matter. And here's the other piece. I have come to conclude it really, when push comes to shove, management really matters. I have also worked for 2 honest-to-God true sociopaths. Look up the definition of sociopath. I am using the word as a technical word. Look and see what it means. you know what? You can't tell when you're dealing with a sociopath. That's sort of the essence of it. And when you're, that's a surprise. That is a killer asteroid, but that's one where it doesn't matter how you evaluate your management team. Things happen. You want someone who isn't going to throw up their hands in despair. You want someone who understands that there are going to be long, dark, lonely nights. Ideally, you want someone who wants to work in a team, because CEOs do not make businesses. They don't make teams. For those of you old enough to remember Michael Jordan, as great as he was, he still needed Scottie Pippen and Dennis Rodman and the other people around him. This is a team game, and management teams really matter.
Yep, definitely a good theme here about teamwork and management. So let's lighten it up a little bit. I want each of you to pick either a technology or an ecosystem. Let's say my best guess is, Chuck, you'll choose finance, for example. So what are the trends you're seeing recently in the angel investing world, in whatever you want to pick? And what would you like to cancel, get rid of, or work on more, or augment? Chuck, you want to start?
Well, since you challenged me with finance, I have to choose that. It's interesting. 10 years ago, you could look at a pitch deck, and every single pitch deck had an offer. They were raising a certain amount of money on certain terms.
I think you can turn your mic off. Maybe it keeps going on.
I think it's a battery.
There.
So 10 years ago, every single pitch deck you saw had a slide that had an offer. They were raising so much money, and they were going to raise it on some terms, and those terms, were competitive or not. And one of the things that I've noticed is recently, slide decks are not coming anymore that have terms in them. They don't have anything, is it a safe, is it a priced round, is it a convertible note? It's just missing. And then you question the founder about that. You say, what are your terms? Oh, we don't know. We're going to let the lead investor set the terms. This is not productive. If you're trying to invest money, this is a race about what's the best deal. And I could take two identical deals in every other respect, and one of them would have good terms, and one of them would have bad terms, and I'm going to invest in one of those, and it's not the bad terms. It almost seems like founders today are lazy about doing the work to figure out what their business ought to be worth. They're a little bit lazy about asking for money, but not telling me the terms that they're going to ask for when I give them money. And so if you're an investor, insist on terms. If you're a founder, know that investors are going to insist on that, and the sooner you come to grips with that, the sooner you put it in the deck, the sooner you can have a productive conversation with an investor.
What was the question again?
So you could pick a technology or a system or ecosystem, and what are the trends you're seeing? Let's say Gen AI. What are the trends you're seeing there? What would you get rid of, and what would you index on a little bit more?
I mean, back to my problem is, like, I get crazy valuations of what they have inflated view of their, valuation. But I mean, right now, with the whole Gen AI, ever since 2022 with the ChatGPT, like, we're seeing a lot of noise out and trying to understand, like, what their actual IP is versus a wrapper. I think, getting clarity around that, especially, I'm not very technical, so when I do a lot of due diligence, I bring in highly technical people to help with due diligence. If you're doing angel investing, I bring a team of people to help me due diligence. Usually they have deep domain expertise. I'm sort of a generalist, so as long as, when I see a pitch deck, I just go to the team. If the team are credible in the space that they're trying to solve for, I take the meeting. And I've done investments in fintech and biotech, consumer, but I don't know if I'm answering the question, but I think, I'm sorry. Like,
Well, what would you get rid of? What would you wish founders did less of?
okay. I think for me, like, if you're investing early pre-seed seed, which I do, I don't have any metrics, right? If you're doing Series A or Series B, like, you have numbers to work with. It's much easier to do due diligence, right? It's more of like an Excel spreadsheet sometimes. I wish that founders can really, instead of going straight into the pitch deck, like, I would like to understand why they're solving the problem, maybe kind of go into like the background of reason why they're going to invest 10 years of their life, right, on that specific problem. And just kind of like also go back to the history of, like, you know, I like to hear the history of their childhood, right? Like, where they grew up, you know, what type of hardships they overcome. And this is something I learned from Paige Craig, who likes to invest with people with a chip on their shoulder. And I really like that signal. It's like they're there to prove something, right? And so I actually look for that background where the founder has a massive chip on their shoulder and wants to prove to the world that, you know, they have their value in a way. So I really like, instead of looking at the pitch deck and going in, I just like to look at the why and their background deeply, you know, and just seeing what they've overcome in their history versus just going straight to the pitch.
Good deal. Peter?
So I'm going to rattle off a little bit of a laundry list. Founders. Virtually every pitch I see is all about you. Hint, couldn't care less. That's not why I'm in the room. That's not why I'm listening. I am here to make money for my family. Investors, you're not buying the company. You're buying the paper. You are not going to have control. In fact, no matter how much the founder tells you they want your involvement and your advice and your knowledge and your expertise, they really never want to hear from you once the check clears. That is two sides of the same coin. So, founders, stop it. I don't care where you grew up, not during your pitch. Later on, when I'm deep in due diligence, I'm trying to figure out if you are a psychopath. If you're a sociopath, I'm never going to figure it out. But if you're a psychopath, yeah, I'm going to want to hear that. But don't tell me your childhood when you have only 15 minutes for me to decide whether or not I'm going to do another meeting with you. And investors, don't make the mistake of going, this is a huge problem and a gigantic opportunity, because if the terms are wrong, you ain't ever going to see it. So what don't I like? Guys, please, I'm ready. I have never owned a gun in my life. I've only fired a weapon a few times. I am ready to go buy one for the next meeting to use on the next person who starts telling me that their company's using AI. Couldn't care less. You are making goddamn marshmallows. You are not using AI. Okay? I am so tired of it. And by the way, some very smart people I've been with pointed out that like 3% of the companies who are telling us they're AI companies are actually doing AI. Most of the rest of them are using this. This is the buzzword of the day. Hands up, how many people were involved in Web3 businesses 2 years ago? Come on, admit it, yeah, right. Okay, I'm seeing about 3 hands here. Most of the rest of you are telling lies. Okay, we know this. You were all excited about Web3, except for me, because I remember the 1990s, which was the same thing, and we just called it ISPs. So, don't go with the buzzwords. Tell us what you're really doing. Me, I'm a finance guy. Show me that you understand your economics, please. And if your economics are going to require an enormous amount of capital for many, many years, to which specifically drug discovery, many innovative medical devices, anything that requires heavy capital investment, if you're doing manufacturing or something like that, please don't waste your time in angel rooms. There's not enough capital there, and if you take their money, as far as I'm concerned, that is pretty much the equivalent of theft, because they're going to get crushed under your future capital needs. Don't waste your time. It's not going to benefit you. Go to places where they can write big checks over multiple years. Just basic things. Think about whether you're in, as an investor, you want to be in places where the companies kind of match what you want to do. If you want to do environmental deals, if you want to make the world sustainable, you're probably better off in E8. You shouldn't be in a place that brings you nothing but way out there cloud computing kinds of stuff. It's not going to be your thing. Likewise, founders, match the room to what you're doing. My personal close rate as a CFO when I'm raising money for my companies is now on the order of 80 to 85% once I get to a one-on-one conversation or meeting with an investor. Why? Because I've gotten really good at figuring out who's going to be interested in this particular industry, this particular deal structure. I know what they need to hear. I know what I have to tell them. And anyone who doesn't match, I don't spend time pitching. I politely move them on. You should do the same thing. Your time is precious. By the way, don't go nuts on your deal terms, because if you spend an extra 4 months, you will be worse off than doing revenue. I'll stop there.
Thank you very much. So the next one will be a little bit shorter. I want to give the audience a chance to ask a few questions to wrap it up real quick. Now, one quick question I have here is some of the common pitfalls for startups I can think of. Maybe they set the wrong pricing, or this problem didn't need to be solved now, or the team doesn't have cohesion or something like that. If you could give me a few bullet points in what founders could do to avoid these common pitfalls, what would they be? Very short, please. Chuck.
Know who your customer is and know how you're going to reach them. You know, if a founder doesn't know who is likely to buy their service or product, or if they don't know how to reach them, you know, the business is dead on arrival. Know your customer. I can't tell you how many times I've seen a pitch where a founder came in and talked to me as though I were a customer, not as though I were an investor. So if you're a founder talking to an investor, think about where they are and think about where you want them to be at the end of the conversation, and what's the journey to get them from where they are to where you want them to be. Don't talk to them as a customer. You may need to explain enough so that they know what the product is, but talk to them like an investor. Speak an investor's language. Talk to them as though you really want them to profit from the deal you're proposing to them, and then show them how.
Thank you. Ken?
Yeah, since I'm a pre-seed seed investor, I mean, the number one thing that I like to see founders do is like, so most of my portfolio is like Y Combinator. Like I've reached out to a lot of the Y Combinator, I would say 80% of my portfolio, and they really believe in, you know, spending a lot of time with your ICPs, right? Your ideal customer profile. So if a founder hasn't spoken to, you know, 20, 50, 100 and validated that they're building something that they want, then it's, for me, it's usually too early or not mature enough to make investment, because the biggest risk I've seen is just product market fit. Like that's the number one difficult problem to scale to a $1 billion or $10 billion, right? You need to build something that people want. And if you haven't interviewed your clients and asked if they'll buy it, then how would you determine if you have anything? Number two is like, it's all about the team. I mean, you have to recruit the biggest rock star super talent that you can find, because you're up against Amazon or any incumbent that has 10,000 engineers, right? So you have to have incredible like talent that can help you, you know, go to war with you and navigate the crazy startup life. And most don't work out. Even like Y Combinator startups, right? Like 4% hit unicorn status. That means 96% don't, right? I mean, and as a venture investor, you need to hit that $1 billion mark, or it's going to be hard for us to, you know, return and be alpha. So team and know your customers.
Peter?
So, big turnoff for me, people pitching me who don't listen. If they think that they didn't need to listen to customers, boy, that's a big one. I can't tell you how many times I have heard some brilliant technologists come in and say, I will bring forth from my brow the brilliance of my creation, and I will allow the unworthy worms to prostrate themselves in front of me, begging me to allow them to shower me with wealth while they buy this lousy piece of software that I've created. It's not a good sales approach. I want people who if someone asks a question, I want them to listen to the question. I want them to hear the question. I want them, if someone says something that is looking at their fundamental assumptions, they're responding. The fact is, as I said, almost everyone has pivots. We know it's going to change. I think there's value in talking to customers. On the other hand, I go nuts when someone says, "Oh yeah, we're in revenue. We've got $3,000 a month of ARR." No, that's a successful market test where you've gotten somebody to give you a little money for what it's costing to test your product. It's not revenue. But, and here's a place where we look at the world a little differently. I don't really care if I invest in a unicorn. I can invest in a unicorn and get zero out of it. Or I might invest in a company that sells for $15, $20 million, and I may make 15, 20 times my money. So I want to know where they're going, and I want to know that the leadership team, although they are proud and confident, is also realistic, and if the time comes when you should take the money off the table and share it with your partners who are your investors, I want to know they're willing to do that. Because again, I'm not ever going to get my picture on the front of a magazine because the company I invested in turned into a unicorn. But I will know that I've got the ability, if my kid ever gets around to it, to perhaps take care of my grandkids' education. That's what motivates me, and that's what I'm looking for in the companies that I invest in.
Sounds good. So we're going to take it to the audience real quick. Now, to go a little bit faster, I want to, I'll let you guys volunteer if you feel strongly about the question that's going to be asked, maybe about 2 or 3 questions from the audience. And then if there's no volunteer, I'll veto one of you. So anybody from the audience wants to ask a question? We have one on the very back. Amit.
Okay.
How do you feel about CEOs taking money out of the pool or fundraising or out of the funds that they raised, at pre-seed stage? So I've seen a lot of entrepreneurs who raise $2 million and they start taking a check for themselves as a case. What are your thoughts on that?
Who wants to
I mean,
volunteer on that
I
one?
think it's fine. General rule is pre-seed. Like if you raise paper pre-seed, maybe pay yourself 60, 80K. If you raise a proper pre-seed, like 1.1 million to 2 million, and if you have a 2 or 3, take the 120, 130, right? But generally, yeah, you want them to be very frugal with the capital. But I mean, it just depends.
Yeah, so this is a major argument that's been going on in angel circles for years. I am not interested in investing in a company where my management and my people are not making a wage that they can support a family at least moderately, and there needs to be a decent benefits package. Otherwise, the deal is enormously risky. If their 90-year-old gets into an accident, busts up their leg, and there's $25,000 of medical expenses, it is bad for me and my family if the person that we've been betting on suddenly has to moonlight to pay the medical bills. So now, if you're talking about, we just raised $2 million and I want to take out $500,000 to buy some of my stock out, no, that's a no-no. If someone says, I just raised $2 million and I want to take out $80,000 as a 40% commission for having raised it, no, that's your job. But as a basic salary and benefits package, if I don't see that, I don't invest.
And you're talking about salary, right?
Yes.
Okay, good. It's not like taking money out the table, which happens all the time if on a later stage, right? They sell to the next investor.
Go ahead.
I would love to get your thoughts on how you think founders, or what framework founders should use to decide the valuation of their company.
That's a tough, yeah.
Oh, no, it's a very easy one. It's a very easy one. It's incredibly easy.
Depends on the traction.
No, it's very, very easy. And by the way, don't ever walk into me and tell me that you want to use a safe or a convert because you don't know how to put a value on your business. If you don't know how to do that, then you don't know how to take care of your investors, and you're dangerous to me and my family. Go away. So what's the framework for valuation? You put together reasonable, middle-of-the-road terms that are protective of the early people. It's amazing to me that in this world, we have said the people who take the biggest risk and have the least influence should get the worst terms. That is dumb. By the way, friends and family rounds are raised by companies whose founders don't like their friends or their families. because you always get screwed as a friend and family investor. You should be looking at where you think your company is going to go, discount it enormously, add to the time, and make sure that your investors are going to get a healthy return if you pull it off. It's not hard. I do it in my head all the time.
Do you invest in AI companies though? Like,
No, because I don't understand them.
We have one question on the. Well, let's make it the last one.
Yeah, I was just curious, I think you all come from different backgrounds. What your take what your take is on technical founders who may not have most of the managerial finance backing versus more CEO finance founders who are backed by technical. I was just curious on what your take on just different types of founders and your preference, I guess.
Chuck, you want to give it a go?
Sure. No founder is perfect. You know, there is no perfect founder. There's no founder that knows everything they need to know. And so they just need to surround themselves with people who do, right? I worry a little bit about highly technical founders because they fall into this trap. If I build it, they will come. And it's not always true, of course. But they get so enamored of the idea, they get so enamored of the tech, they get so enamored with this code string or whether I've got my code on GitHub or someplace else, and they take their mind off of all the rest of the things that have to get done. The financing, you know, the HR, the go-to-market, who's my customer, what's my intellectual property, how do I protect whatever kind of barriers to competition I can create. And so if you're a narrow founder, maybe narrow and deep, surround yourself with people who can do the rest of the things that need to be done.
Thank you very much, guys. I think we can wrap it up here, and hopefully you enjoyed the rest of the evening with the rest of the program. Round of applause for the panelists.